So JD.com, the stock was down about 40% year to date back in August when the crackdown really started hitting. But then it had a 30% pop based on their Q2 numbers. And their Q2 numbers were very good. Sales on the retail side were up 27%, on the logistics side, 50%. Even more important, their average, the total order volume per user was up. So more people are buying more things on average, which is every e-commerce company's dream. But their net profit margin was down 1%. That should be an area of concern, but they said very clearly that they're investing into expanding e-commerce infrastructure into lesser developed regions and lower tier cities, 4th to 6th tier cities. So this is the reason I think JD.com operates in this really unique space in this entire crackdown environment, because they are working to build the retail infrastructure, the automation, the innovation, the grocery warehousing and cold chain logistics to bring economic activity into a more widespread region. And that is very much in line with the goals that the Chinese government has set down in this entire crackdown.
So you do not acknowledge that you're taking on a fair amount of headline risk, that you might walk into the office one morning and find a crackdown related specifically to JD, the way it did to for-profit education or gaming?
Yep. So this is the most important thing. About a month ago, I was here on Tech Check. We were talking about this distinction between hard tech and soft tech. Soft tech is like gaming and ed tech and fintech and even e-commerce for the most part. Hard tech is biotech and renewables and semiconductors and the things that will build the infrastructure for the 21st century. And any time an investor thinks about looking at China, think in that dichotomy. Even Xi Jinping, in a recent essay in Qiushi, which is their official monthly publication of the Communist Party, he gave this distinction between fictional growth and genuine growth. What is the genuine growth? What's going to build the economy to get the country to the 21st, like as a leader into the 21st century? And JD has been building warehouses. People I speak to in the logistics space said their warehouse automation and innovation is on par, if not better than Amazon. They've been working, bringing offline businesses online, which again, rather than displacing and killing offline businesses, their entire competitive positioning is to help bridge that gap and help bring local mom and pop shops and local appliance chains and local grocery stores, bring them online and provide them digital infrastructure. And that's the reason I think JD sits in this really unique position between the hard tech and the soft tech space.
But Ranjan, I understand how this is a different type of company in that it's bridging the online and offline. But isn't there still just so much headline risk right now, so much uncertainty about what the Chinese government is going to do and what the potential fallout could be?
Yep. So I would say leaving the country completely, worrying about this kind of risk at any level, it isn't necessarily the most prudent way to approach this, because again, everything that has been done has been telegraphed. Again, fictional growth versus genuine growth, going after things that are deemed unproductive to society versus things that are productive to society. And I will say the Evergrande situation clearly poses a great deal of risk over the next few days, over the next few weeks, but even the action the government took overnight. The PBOC injected $19 billion into the repo market, and Evergrande, in a vaguely worded statement, they said that they're going to hit their next interest payment due tomorrow, but only in a domestic, local, UN-denominated bond. They haven't said anything about the dollar-denominated bonds. And right there, again, you see, in this kind of bailout, China is not bringing the bazooka like they did in 2015 and 2016. They're bringing a scalpel where they're going to pick and choose and be much more methodical about how they approach this type of bailout. And I do think that JD is actually situated fairly well in that approach.
Ranjan, I guess the